What's up, man?
How's it going, Mitt? Another
Good,
good
good.
market day.
Nice.
um, so, guys, we're going to talk about a subject that I like and I love. It's called technical analysis. So here's the thing: like we're all investors, we're all traders here, um, and so like not knowing technical analysis or really not knowing how to read a chart. It's kind of like you're a chef in a kitchen and you see a vegetable and you're not sure what that vegetable is. Um, Actually, that's probably a terrible analogy. I need to come up with a better analogy. But so yeah, reading charts are important, right? So if you're even if you're not a technical trader or you don't day trade, you don't look for breakouts and whatnot. At the very basic level, it's important to know how to read charts to understand what kind of market we are in. Um, and to see what the long-term trend is, and also the medium-term trend and the short-term trends will also be important in your trading and investing decisions. Because yeah, again, you've got to understand what the market's doing, what the structure looks like. Like, is there fear or greed in the market? And a common question I see so much in a lot of different investing discourse, like the Dumb Money one, or even on YouTube channels, people are asked like, "Why is the price crashing?" Or like, it's blowing up," or like, "Yeah, why is it down? What's going on?" Like 90% of the time, there's no news that's causing that. It's just bigger traders than the person that's freaking out that's moving the market. And there's reasons why a lot of these reasons are technical. So there, and we'll get into that in a bit. So the number one platform for technical analysis, charts, stock charts, cryptocurrency charts, charts on gold, oil, futures, is tradingview.com. So with that, let me go ahead and share my screen, desktop 2. So here we go. There's a lot on the screen at the moment, but don't worry about that. It is tradingview.com. You can go ahead and make an account, and I'll show you the different plans. So you can go with the basic. Just go with the basic to start. It gives you a chart, some drawing tools. I'm on the Pro Plus because I on the Pro Plus it gives me more indicators per chart. It gives me 4 charts in one layout, which we'll get to. You have more server side alerts, and I don't even use alerts. You would use alerts if you're day trading. Intraday exotic charts. And then Pro upwards is ad free, which is really big because when you're charting every 15 or 30 minutes, an ad will pop up. Custom based chart formulas because you can put in little scripts to give you custom indicators. There's also a premium, but I think for most people you don't need a premium. I think for most people you want to go with the Pro or the Pro Plus. Here's a little trick. So get the Pro Plus. When it comes time to renew, contact support and tell them that you're wanting to cancel, and they'll give you a discount. So that like they've been doing that the last couple of years. So okay, so let's go back to the homepage of tradingview.com. There's a lot on here. Don't worry about it because you worry about one thing, right? You're trading Apple. I want to know what Apple looks like. So here's a search bar at the top, AAPL, and check it out. They've got the US, the NASDAQ, but then like they have all these international markets too. So if you're an international trader, you can I guess you would select this different chart, but we're in America, so we're gonna go with the NASDAQ. So the first thing, you're gonna have this chart. This is not the chart you want to use. It gives you an overview of Apple and some top people that post ideas on Apple and some financials. None of that is I even care about. What I care about is this blue button right here, kind of like in the middle of the page to the right. It's called the full featured chart. So click on that, and you can bookmark this, by the way. You can drag this over here and just bookmark it. It says Apple. And let me clear out everything real quick. So this is tradingview.com. Now let me reset everything so I can start. Oh, here. So I've customized mine a little bit. Let me see here. Can I? Okay, it doesn't look like I can restart. Apply defaults. Okay, here I can. Okay, so this is your default chart on tradingview.com. Hold on, let me get rid of these indicators. All right, so Apple, we've got candlesticks, we've got volume. So right now, see, I'm moving it and it's kind of locked. To unlock it, you have to. There's this auto button down here. Click that, and now you can click and drag the chart around a little bit more. You can also come over here to the price, which is on the y-axis on the right. You click and drag up to stretch the candlesticks so you can see more info, or you can drag down to kind of like, get a more bigger view. And when you do that, that's almost kind of like the log chart. You could just hit log chart. Oh, no, log chart is different. There's log and auto chart. Okay, so that is how you navigate. You can click and drag. You can, if you up on the mouse, you can do this, or down on the mouse, and you can do this. So that's just to kind of position your price action. Okay, now you want to right click on here and go to settings. So the first thing I want to do is go to appearance. And do you see these kind of like gray white lines? You might not see it, but I don't like them. I don't want them. So I click on vertical grid lines. I drag this to 0. Horizontal grid lines. I also drag this to 0. And boom. Now it's a cleaner chart. There's no grid on here. And I like that. You can go back here and let's see what other things we can do. Okay, if you're on a company, you probably want to show earnings on a chart. That's what this checkbox is, and you can see the earnings. Economic events on a chart. Interesting. This is a new thing. I'm not sure what economic thing is. Show dividends on a chart. So if you're in a chart that has dividends, you could have this in there, but I don't. I'm not a dividend investor, so I'm going to uncheck that. Show splits in a chart. So that's pretty cool. You can see where an Apple split, which it split sometime here late August. So that's events. So we go back to trading. There's nothing here you need to really change. Appearance, you can change you can change the background color to yellow if you want, but I don't recommend that. Oh, it looks like I have a gradient on here. You can have a background that's solid. I think solid is fine. Crosshair, watermark. That's pretty much all you got to do. Let's see here. You want the currency on here. Indicator name label. I mean, this is good if you don't know what indicators are. But the bottom one is talking about volume, and we'll get to that in a second. Oh, you definitely, if you're trading stocks, you want this because this shows pre and post market price. And it's not much else you need to change here. So let's go to that pre and post market price right now, actually. So I'm zooming in. So see, I'm going up on the scroll wheel and I'm going up on the side here. So the red line is where the price closed during market hours. The blue line is the post market price. So you can see here it's 10 cents more. Okay, so that is setting up TradingView. Now, real quickly, how are we going to change the time, right? You see this D up here, that stands for daily chart. You click here, and I'll show you the timelines I use. I use daily chart, I use the 4 hour, I use the 1 hour, and the 15 minute, the 5 minute, and the 1 minute. Those are the timelines I use to get short, medium, and long-term trends. And then here you got some crazy candlesticks you can use. Oh, this is an interesting one. I've never seen this one. But usually I've only you can have line. Again, don't use line. Like the traders do not use lines. You have hollow candlesticks. You've got bars. Bars is an old school way of looking at candlesticks. So normally you either want candlesticks, or if you're a day trader, you want Heiken Ashi candlesticks. And this is a kind of a momentum day trader style candlestick. But for most people, again, all you need is the basic candlestick. Okay, so now we're going to talk about candlesticks. We're going to talk about volume. I'm going to talk about two basic indicators, and then I'm going to talk about moving averages. And I guess maybe we'll get the Fibonacci extension. So we're still talking about basic trading view and how to set up your chart. We're on the 15-minute candlesticks at the moment, meaning each candlestick represents 15 minutes. If this was the daily chart, one candlestick would represent one full day. So you can see there's green candlesticks and red candlesticks. Green candlesticks is a bullish candle. Red candlesticks is a bearish candlestick. So here, I'm going to draw this. Oops. Oh, yeah. And you've got drawing tools on the right here, which are pretty helpful. And you got text tools, shape tools, some Fibonacci stuff. So I've got this box here. And oh, yeah. And then you have these other toolbars that pop up. This is my favorites toolbar. And you basically you hover over something and you star it, and you'll go to your favorites toolbar, which is right here. Now I have the drawing thing selected, so it gives me an extra toolbar called this drawing tool. So I'm going to draw a bullish candlestick with a wick. Oops. And let's make this full opacity. So I'm going to explain. Let me make this a little thicker. There we go. Okay. And let me kind of. Okay. So this is like a typical bullish candlestick, and we'll get into what candlesticks represent. So right here is called a start. Open and close. Sorry, I was like, what? I was forgetting the terminology. So this is where price open, and up here is price close. So let's pretend this is a daily, a day candlestick. So what this tells you, the base of this candlestick is where the price started at the beginning of the day. This top line right here is where price closed at the end of the day. Now we see these wicks here, right? So what does the wick represent? Let's go here. This represents the low of the day, low. So this means like the price started here at 128.54, but the bears pushed the price down all the way to 128. But the bulls recovered and pushed the price all the way back up here. So this is the high of the daily candlestick or 15-minute candlestick. So this is the high. Now, so it went all the way up to $133, but the bears pushed it back down to $133. And that's where it ended the day. So this is good information because it could tell you a lot just by the shape of the candlestick. So for example, if we have a candlestick that looks more like this, so this is, you can see here, you had a lot of movement, but the price opened and closed, pretty close to each other, but the bears and the bulls were battling out all day. This is a lot of volatility. It was all the way up here, all the way down here. A lot of indecision basically here, and that's what this kind of candlestick represents. Now, what happens if the body is up here? Oh, I can't. I'll just do this. So now we've moved the body of the candlestick up here. So what this represents is price opened pretty high up here, but then the bears pushed it way down here. So I love the ruler because the ruler can tell me how much this move was. So about a 3.8% move. So the bears pushed it all the way down, but the bears pushed it all the way down, but the bulls recovered. The bulls recovered and pushed this all the way back up and closed it up here. So just by looking at this candlestick, this shows strength. Now you need more than just a candlestick. You need some other, volume and other things to kind of like to give you an idea what's going on. But this is a candlestick that basically says the bulls won. So now let's go to the opposite of this. Oh, here, let me just drag this guy down here. And now we're going to flip it. Basically, the bearish candlestick is the opposite of everything I just said. So on a bearish candlestick, a red candlestick, the price opened at the top line, and it closed at the bottom line. And the wicks still represent the same thing, the high and the low of the candlestick. So basically the price opened up here, and it closed here. But here, the bulls bought this up. So the bulls bought it all the way up here, but the strength of the bears was stronger at the close. So the bears were able to push this all the way down. So this is not a candlestick you want to see if you're bullish. And it depends on time frame and other things in the structure. But this is how a candlestick works. So, and you can put a few of these together, right? So you can kind of have, here, I will do this. We'll go back to a green candlestick. So on the bullish one, it closed here. And it opened here. And so this is called a 3-stick pattern, basically. Basically, you make your entry above this. This is a bullish pattern with just candlesticks. Because more often than not, there'll be if there's a breakout, it'll eventually look something like this. So that this is just a quick way of saying you can use candlesticks to help you figure out or forecast what's more likely to happen than unlikely to happen. And that's the thing with technical analysis, people. It's not predicting the future. It's just what is happening right now, what happened in the past, and what is more likely to happen next. So that's candlesticks. So let's go to, let's go to something I like to trade a lot, which is Bitcoin. And we're going to go to the daily chart, and we're going to get into trend lines now. And before I do that, I'm going to go ahead and here, let me reset chart. Let me delete all these little trend lines in here. And Bitcoin is asset where you have to look at it on a log chart to make sense, because, an asset that goes from 0 to 20,000, in 10 years. And it's market cycles. You have to kind of look at it a log to kind of understand the price action that's happening. Okay, so trends. So here, let me take these out and we will draw them back in. A trend line is, you can use this tool right here. It's called the line tool. You click that and you find a point. You want to make at least 3 or more connections to have a good trend line. You can't really do it with 2 because that's not enough information. It's not enough confirmation of a trend line. So here, this is the daily chart. So this is a period from March of 2018 all the way to November of 2018. So basically almost an entire year. You can see a touch here, several touches here, almost here, and another touch here. So this is confirmation that you have price that is going down, getting weaker over time. So here, oops. Here, and finally here. So you want points that touch to draw a trend line. Now, what I'm doing here is I'm drawing a triangle. So you have points that touch here. So this is a basic descending triangle, and I love triangles because it's human psychology in action, right? So this is a bearish pattern, by the way, because what you have a support that keeps getting tested over and over and over again. And when you can think of the bulls counterattacking, right? When the price comes down here, the bulls buy the asset, push it back up, but then it gets knocked back down, and the bulls try again. Every time the bulls try and push the price back up, it gets weaker and weaker and weaker. And over time, what's more likely to happen than not is the price is going to break down out of this triangle. And the target of the breakdown is the height of the triangle. Now, not necessarily the price is always going to get there. Yeah, I'm not sure why I can't do that. So this was basically a 48% move. So you're targeting a 48% move down here as well. So right here, so this actually hit the target pretty exact. And now what's going on over here is you've got some touches here. Now this is more of a rough triangle, but still a triangle because you have multiple points. You can even go to here, and it's okay if it breaks out a little bit as long as there's more points that validate this triangle. So this is an ascending triangle. So this is an opposite of a descending triangle in that this is a bullish pattern. So you can hear the bulls are getting stronger over time, and eventually this thing breaks. So I trade triangles. I love triangles. Well, when I used to be a day trader, I love triangles. And you can use trend lines to find just like, hey, where are we at overall? Like, oh, this is a trend line right here because we're in this up move. So it's good to use trend lines to kind of like see where we are, right? Oh, you know what? A good chart to pull up would be SPY. So let's look at SPY. Let's go to the weekly chart. So each candlestick represents a week. So as you can see from all the way from here to here, roughly, we have basically this long-term trend line. So the U.S. stock market has been in the bull market ever since the bottom of February 2009. So this was the housing crisis of 2008, where we had a 50% drop in 72 weeks. So that was pretty nasty. A very bad, what is that, a 2-year bear market? Let's see. Let's go to days. So this was from here. So I went to days now. No. So this is oh wait. 518 days. Wow. Yeah. So basically a 2-year bear market. This is what a bear market looks like. But this is what a bull market looks like. And not to get into macro too much, but a lot of money printing can help the stock market. And and over here we have like this COVID crash. So along a bull market, you will have corrections, right? You have profit taking. People that entered over here, well, they want to take their profits over here, and that's what causes this. The same thing over here. You have a fast run up. People that bought here, they're going to take their profits, and then it's going to come down and correct. Now, people that bought here, you're up now, right? And this big guy right here, this was the COVID crash of 2020, February to March. This was a 35% correction. But it was we had a very fast recovery because lots of stimulus money was printed, and that's why we're at all-time highs in the Nasdaq and the Dow. So it's good to understand trends, right? So we're still in a bull market. This doesn't change, people, until where is the drawing tool? Oh, right here, brush. This doesn't change until this trend line is broken. Price comes back here and then it gets rejected again. Then we're in a bull market. I mean, a bear market, because see here, it did get broken through, but price came back, and instead of breaking back down, it actually uses a support to bounce off of. So the long-term trend is still intact. We're not this is what a bear market looks like. We don't see that at all. We're still in a bull market. So okay, so volume down here, and it probably helps if I zoom in a bit more. This is an important indicator too, because these bars represent volume. Green, it means more bulls than bears. Red, more bears than bulls. So what we see here, we see declining volume. And obviously, like here, there's a lot of volume happening, right? Because the COVID crash happened. So we have several days of people selling off all their assets. And then here, a lot of people came back because they thought that the correction was over, and they bought this, but then it continued to go down, and you have high volume here because a lot of people are coming back to the market, back to their brokers, so they're trading a lot. That's why you have high volume here, and then it stabilizes, right? People are happy with their positions. It goes back to kind of normal trading. You have a big sell off here, you got a sell off here, and a sell off here. But it's important to know what volume represents. Okay. Now I want to talk about two basic indicators, and that's going to be it, because there are thousands of different indicators you can use. The basic indicators are MACD, or moving average convergence divergence, and RSI, or relative strength index. So with the relative strength index, to make this a little easier to see, I'm going to double click on it, click style, click this color, and I'm going to choose a thicker line. All right. So first, let's focus on MACD. So you have a fast moving line and a slow moving line. You basically, and you got this histogram. So what this is telling me here, if I zoom in, I can do this on here as well, like in the price action. We see price is about to flip over, meaning when you see the blue over here cross above the orange line is slower than the blue line. When it crosses over, that's called a golden cross. That's bullish, because then you have bullish action happen, right? So see, we can see the flip happen here, and now the price is a little higher here. But then it flipped back here, and now the price is back lower. So it shows you momentum. Is the action in the short term more bullish or bearish than the long term. And now the opposite is true, right? So if you have the orange line cross over the blue line, or the blue line cross under the slow line, that's called a death cross or bearish. You typically, you want, if you want bullish action, you want the faster moving average to be always above the slower moving average, because that means your price is going up over time, right? But it's not always going to do that, because it does this action, or I should probably do this. um, I guess you're not even seeing my video. Uh, so now that's MACD. RSI is relative strength. So here we can see you have the 70 line and you've got the 30 line. The closer this purple line gets to the top, it means we're getting to overbought conditions. That means, hey, there might be profit taking here that happens, or just be careful, because we're getting close to overbought, or you can say overvalued. That's another way to think of it. Now, as price gets down here, gets closer to the 30 line, or even dips below it, like right here, you could it's oversold conditions. So it could represent, a good range to buy if you're just trading just this indicator. And now here's the thing to note about RSI. RSI cools off over time, right? So we see this intense drop right here for COVID. This was the biggest drop. It drastically changed the RSI. Now, as RSI starts to go sideways a little bit, it's going to cool off. But as we can see, this drop is even bigger than the last drop. So, but the RSI is a little bit higher than here. So this is actually this is a good example of divergence. So divergence is if you see RSI going up, but you see price action going down, a reversal is most likely coming soon. So that's another technical way to trade, because and as we can see, a reversal did happen. So that is it. So that's the basics of charts. You want to understand, hey, are we in a bull market? Are we in a bear market? Is there profit taking going on? Because your price gets really high and then all of a sudden it sells off. Probably somebody's taking profit. Now if price gets back down over here and all of a sudden they buy it over here, that's hey, this is a good entry. So a lot of people are seeing that, and they want to get a better dollar cost average on their asset. So with that, Mitt, do you have any questions before I turn off the screen share?
No, I think you hit it dead on. You did a little deeper dive, which is good. It's for those who really want to learn the basics of technical analysis. Yeah, no, this is amazing. At least you're giving folks a preview. I'm not too much of a technical trader, so this actually helps like add an additional sanity check to your trades, right? So
Mm-hmm.
if you're trading, you have a bias or direction, and this is a way like you get your little confirmation or conviction that okay, this is also giving me a green light along with my other strategy that I'm trying to follow. So no, this is
Exactly.
an amazing. I think folks should see this and understand this at least to help their trading skills. Yep.
Yeah, exactly. So it's a good thing to supplement your investments and trading.
Yep.
But yeah, tradingview.com. Again, you can start with their basic plan and just play around with the different indicators. There are so many indicators, and so many ways to trade, but it's really a good tool to get a good high level overview perspective on the market.
Yep. All righty.